Let's start with the macro picture, Stephanie. Take us through some of the numbers that you'll be looking for, and with particular note that some of the inflation numbers we will be seeing are rear view mirror kind of numbers.
Yeah, it's a huge week, Tyler, this week. The next 5 days, we're going to learn a lot about the economy and where we're going, where we were, where we're going. And we're also going to learn about monetary policy and the Fed. And then, of course, we've got profits. In terms of the data, the three data points I'm looking for from the economic side of things is the second quarter GDP, the preliminary number. Believe it or not, the number expected is still 2.3% positive. That's a year-over-year number, probably a bit too high. In terms of the inflation figures, core PCE at 4.8% year-over-year is expected. We know the Fed likes this gauge, and they want it to be 2%. So the number is still going to be high and hot. And of course, we get the employment cost index, which will also be pretty hot as well at 6.7%. Again, year-over-year numbers. The inflation story isn't going away. And then, of course, we do get the Fed on Wednesday, as Bob was just mentioning. It's expected to be 75 basis points. I think they're going to do another 75 in September. And then we kind of have to hope that they're going to just step back and look at the economic data. But the data is definitely slowing at this point. And that's why last week, Tyler, the markets rallied, believe it or not, because of the Fed pivot talk, right? Because the economic data came in so soft. So, and then lastly, just quickly on the just big picture on earnings, 35% of the S&P reports this week, but it's 49% of the market cap and 21% of consumer stocks within the S&P report. So we're going to get a real-time gauge of the very important consumer.
So let me just spend one more second on the GDP number. If it comes in negative, as it did in the first quarter, and that first quarter number was kind of poo-pooed. They said there were technical reasons why it was negative. But this time, if it came in negative, would that be more worrisome to you?
Yeah, I mean, is it technically a recession, 2 negative quarters in a row? Yes, but you're right. The first quarter inventories you have to adjust for exports, and that sort of thing. This quarter, it's going to be definitely a more softening of demand side of things. That's why I think the consumer companies are going to be super important to watch. We got General Mills a couple weeks ago, and they were able to see 13% organic growth, and they did not see demand destruction yet, even though they put in 12% price increases. So we have to hear a lot about what the consumer is doing, but we know it's weakening.
Steph, tell us, and hello and happy Monday. Tell us why you're watching Boeing and Caterpillar and Chevron especially.
Yeah, well, so everyone's focused on FANG, so I tried to give you a couple of names that were a little bit off the beaten path, but they're super important companies, right? They're global companies. So Boeing is going to be commentary versus the numbers, right? It's going to be a 787. Do we get any clarity on the delivery resumption? 737 MAX has got to get recertified in China. I don't think we're going to hear that tomorrow, but any kind of color at all. And then, of course, the recovery in travel. We saw American Express, T&E rose 84% year over year when they reported on Friday. So I think that's just an indication travel is actually picking up. We all know that. We all go to the airports and we see that kind of thing. So that should help the overall demand equation. Watch the free cash flow number. It's going to be a negative 900 million. But I think in the third quarter, that actually inflects positive, goes positive. So that's a good thing. So let's listen to that. They have an investor day in September. Just quickly on CAT, it's a global proxy for demand. Want to hear what they have to say. Total revenues, they said at their analyst day, is going to be better than the prior peak highs, which was in 2012 at $66 billion. Watch free cash flow for them as well. They have a $15 billion buyback. And I like that stock a lot. If it were to weaken, that would be one I actually might take a look at and buy back. Finally, Chevron, we know all the energy companies are printing money. We saw it with Schlumberger on Friday. They're going to have a great quarter. Chevron is on Friday. I think they're going to beat on the upstream because of oil prices, downstream because of refining margins. And then again, this is a free cash flow story too. Break evens are at like $50. So we want to see what they're going to do with that $11.2 billion in free cash flow just in this quarter alone that they're going to generate.